Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for the 6th of April. So a slightly shorter week this week after the holiday weekend, and many European traders will be coming back to their trading desks after the non-farm payroll results on Friday, which occurred when the markets were closed. Now we've since then had US markets open in rather sort of thinner trade, and those have pushed the Dow and the S&Ps up to again all-time highs as well. So let's take a look at a few markets here that we're keeping an eye on at the beginning of this week and some of the potential opportunities we're stalking. So if we come and take a look at the Nasdaq here, we can see that the Nasdaq, if we have a look at this on the daily time frame, has really sort of turned around this sort of bearish structure that the market was putting in. It's managed to find support at the 12,750 area and now managed to break through the 13,800 price point. So I think the next area that it needs to sort of push through is this sort of 13,550 area up here. You can see, if I just sort of zoom out of this, it's a bit of a structure that the market had put in. It found support in the past and also had sort of found resistance when it met up with that 13,800 area before. But nevertheless, these markets are now starting to look sort of quite bullish, and I think a lot of it is on the back of the rising yields, which have been one of the concerns in the bond yields, that this is now being sort of seen as evidence of strength in the US economy as opposed to a negative for the equity markets, at least for the time being anyway. If we have a look at the S&Ps, they're still looking rather bullish here, although these markets could be doing with a little bit more of a retracement. The Dow has sort of retraced a little bit better and looking a little bit more sort of on the bullish side. So general sort of direction here for the index markets, I think, is more supportive to the long side at this moment in time, especially as the economies is starting to open up, and these markets and these sort of stocks are likely to benefit from that. If we look at trading opportunities on these markets, I think again it's looking at value areas for positioning, keeping nimble on them of course as well, because some of these trends are not the sort of smoothest, and being prepared to trade the intraday trend in the opposite direction to the prevailing long structures that we have here on these macro pictures. If we have a look at the precious metal markets, I think the one that's looking a little bit more interesting out of the bunch is the silver market. And again, if we have a look at this on the daily time frame, you'll see that we've got this sort of whole range here, which has really been sort of quite messy for a while, but what we have seen here is a structure of lower highs and lower lows forming in silver. We've recently had the bounce off this level just underneath that 24 price point, and now the market has got up to 25, and we've got this decision point here on the 25 level. We got a bearish candle yesterday. We've got the moving averages. We've back into that sort of value zone, back into a well-tested level, a big psychological number as well, and of course the market's in structure of lower highs and lower lows. So the question is here, is silver going to succumb to the trend? And we would expect to see a break below this bearish candle if that takes place. A break below this bearish candle here would look for opportunities and a presumption that this trend may continue, in which case we've got that trading window down to the previous lows. If however and again this is a decision point here, if the market finds support here and breaks above the high, then we could be seeing a move to the high side here. Remember that silver is not necessarily going to be the easiest trend to trade, so sometimes these actually do, as you can see in the past here, they don't necessarily sort of stay in a structured trend for a long time, and we could see a bit of a move to the long side. Nevertheless, these are big markets, big contracts, and there can be some very nice moves on those markets once they do go. If we have a look at this on the 4-hour time frame, you can see that the market structure that we have here and technical structure that we have here on the 4-hour looking a little bit more on the bullish side, and again giving us plenty of levels, plenty of structure here for positioning for technical traders if this does break above the sort of breakout area here and look for the market to be moving higher. Now, coming over to the currency markets, there's a number that I think are worthwhile keeping an eye on, not least markets like euro dollar, which is around that sort of key 118 area. These not looking quite so easy at the moment, because if you look at this on the daily time frame, we got the market retraced back into a key price point at 118 on the daily. In the context of a short trend, if you have a look at this on the 4-hour time frame, you can see that the market's in a long trend at the moment and finding support at 118. So you've got complete conflicting signals here on two different time frames. At the moment, both the dollar and the euro are strong, so that's certainly not going to help the direction of this market for the time being. Likewise, Great British Pound against the dollar is also looking quite interesting. I think from a longer term perspective, if you look at this on the weekly chart, the market is sort of putting in a sort of a buy signal here on the weekly, starting to break out to the long side, possibly looking at pointing towards a move towards that 140 price point. If you come to the 4-hour time frame, we can start to see that there are areas here where we've got structure of trend now with good geometry and good convergence as well. So pullbacks into structure levels, back into geometry zones are certainly areas where traders are going to be looking for opportunities for setups and positioning. One that I think is also worthwhile keeping an eye on is the Singapore dollar against the yen. Now the Singapore dollar is strong at the moment. The yen's been very weak for a long time. That's why we've had these very long running trends here with the yen weakness. Now price action has been sort of consolidating for the past sort of few days here. As you can see, the sort of sideways price action that's been sort of taking place. The Singapore dollar is also strong again this morning. And again, you can see here on the 4-hour time frame, we've got sort of quite an interesting sort of structure starting to form here. So breakouts above this sort of level here that the market started to put in could start to sort of indicate that this is on the next leg higher. You can see that we've got these lows tested now, and again, if I mark that in, we've got a low, another test of the low, other previous tests of the lows as well, and then we've had this sort of breakout to the short side, this false breakout to the short side, just indicating that to me that as this couldn't continue, well, there's no more selling under here. So this looks like a false breakout, and now the market is retesting that high side here. So I'm looking for opportunities here. If this market does break out to the long side, I think the path of least resistance at the moment, looking at that price action, does look to be more supportive to that long side. And even coming to the 60-minute chart, you can see that the technical structure here is starting to look rather interesting. You've got a test here of once, twice, 3 times around these previous pivot points, and the market sort of coming fairly close to these areas now, whilst putting in the structure here of a long trend as well. So a few things there to keep an eye on. I certainly hope it helps, and we'll look forward to speaking to you next time. Bye for now.